Good afternoon, everyone. I'm just waiting for a couple of minutes everyone to join, and then we'll start.
We're actually here in LHV Tallinn today. It's a shortened work day this day because tomorrow we have the Independence Day, but we have the opposite of a short working day, so we're working late tonight. The office is nice and empty. There's no one else here beside us basically, and it's raining ice outside, so we're quite happy to stay put for the next hour or so.
And I don't know which is worse, either COVID or the falling ice.
Depends on the ice.
All right, but I hope everyone has joined or have planned to join. As Jüri mentioned, we are in LHV office in Tallinn. Welcome everyone joining from other locations. Amadeo is calling in from London. Anna is with us here in LHV. We know it's quite clear that COVID puts a lot of restrictions to how we do our daily life and especially work, and how we organize seminars and webinars. But we decided that at least partially we're collecting everyone in the same room in Tallinn office and to
almost everyone. We forgot Amadeo.
Yeah, Amadeo is in London, but. Let's kick it off. We have today a very hot topic. We talk about fraud. We talk about the fraud, especially in the real-time payment space. And it is evident that everyone in the industry, we need to make sure that we are putting a lot of effort to protect our clients, our consumers, our partners, and society in general. And therefore, we thought that it is good to organize a webinar where we actually have a bank, infrastructure bank like LHV. We have a Veriff represented by Jüri, who is providing solutions to fight the fraud, make sure that the KYC processes in online environment are done properly, and also monitoring later on. And we have Amadeo from blockchain.com as a LHV Fintech banking services client, who actually can share the practices, the ways how they have started to fight the fraud, make sure that everything is good and well protected to customers and future customers. Just before we start, a couple of words about LHV. So LHV is rapidly growing Estonian bank. We operate in Estonia as a full service bank, but what is more relevant in terms of fraud fighting is our banking services arm, which provides fintech platform services to all sorts of technology companies, fintechs, and that is headquartered in London. I'm usually in London half of my time, but again, thanks to interesting times, mostly doing everything online, and I'm in Tallinn. My colleague Jüri, who's running the banking services arm, similarly here in Tallinn, but usually quite often in London. We are a preferred partner to many of the fintech companies to provide special real-time payments access to SEPA and GDP fast payments networks, which means that we see quite a bit of different traffic, and we have some quite interesting experience of fraud. And if we consider that LHV processes today around 8% of total euro real-time payments in SEPA instant system, we actually have a quite interesting view how the trends are changing and what are the good measures to fight the fraud. We have quite a broad client portfolio. We have more than 150 fintech clients. They all do quite substantial number of payments, and annually we process roughly 60 billion worth of Europe worth of payments. And you can imagine that if you don't put a lot of effort to make sure that all the monitoring screening systems, partner cooperation in terms of fighting the fraud and all the criminal activities in general, those are the key focus areas for us. Carrying on to the fraud topic. So we have quite a lengthy experience fighting with fraud. And it's mainly coming from the card space, and obviously, yes, all sorts of branch fraud, also counterfeit money, and so on. Fraud is constantly in evolution, and we should look at the fraud as a business. It is definitely for quite a variety of people something what they do for a living, which means that it's evolving, it's always seeking the least resistance, and it's a margin business. If you adopt the rules, if you make fraudsters' life more difficult, they usually try to find easier ways how to make money. So that's why it's always important that we stay on top of the trends, and we stay top of the technology, which helps us to fight the fraud. I think there is quite significant change and realization across the industry that real-time payments change the fraud landscape. We all were really willing to see real-time payments picking up in Europe and SEPA area, and in somewhat similar manner, we did not pay too much attention about the fraudulent activities. And I think in that sense, UK with the faster payments being launched significantly earlier than SEPA instant payments, have had longer experience with fighting fraud and applying the measures which are needed for really protecting the customers and society in general. And therefore, a lot of things what we have seen in UK earlier are now coming in real problems in Euro area as well. The other thing what we have seen, unfortunately, is the COVID impact to the fraud. Obviously, everybody's working from home, fraudsters working from home. The ways how the criminal groups are making money has to move along with them to the online world as well. And that has a significant impact to growth of the fraud in EU and also in UK. As mentioned, fraud is business means that the sophistication always increases. We see very complicated scams. We see very complicated groups and networks really linking with each other, and it's becoming more and more difficult to really track them. But again, applying right tools and the measures and processes that helps. So as mentioned, fraud we have seen before, it was mainly related to the cards, and in online space, the real-time payments are bringing some new trends. As overall, the fraud is increasing, but the trends are different. And what I mean with the trends being different is that I think from card space, we learned a lot. We have had as a service providers, as a merchants, as a consumers, to adopt with the more complicated situations. The card schemes have mandated issuers to implement all sorts of secure customer authentications, so that it's more complicated nowadays to actually build a fraudulent activities based on the cards, which we see in the statistics as well. So unauthorized fraudulent transactions mainly consists the card fraud. And if you look at the UK statistics, which is very well covered, and then very similar trends in Europe, we see that the card fraud is being relatively flat. So card fraud is under this category. But now if we look at the more towards the retail and real-time payments, we see that all fraudulent activities related to the real-time payments, which are collected under authorized push payments fraud, are significantly increasing. Again, this statistics is based on the UK numbers, and UK Finance has done a very good analysis on 2020 figures. I haven't fully received the same detailed review about the SEPA region, but considering the culture, the banks, and the overall technology is relatively similar, we can draw a lot of conclusions from here. So authorized push payments, plus 15%. And if you look at the real numbers, then more than 100,000 UK customers were actually victims of the Abp fraud last year. And this is a significant number. And if you think of the growth as well, then it's clear that there has to be significant improvements across the industry to make sure that all those clients are fully protected. So what we have seen as a retail bank, where we can actually now take the fraud activities, what we see as a retail bank, because we have a broad retail customer base in Estonia, and unfortunately our clients are also victims of the fraud. And what we have seen is that impersonation and the social engineering are the key ones which are driving the Abp fraud. Society is sitting at home, they're working from home, they're quite sensitive about what's happening with their banks and the card payments, and quite often we see that the impersonation is around someone's faking the bank and acting like a bank agent who's calling you because of the fraudulent payments, but in the same time actually collects your personal data to really access to your bank accounts and empty it. So again, those are the things which we see. Some of the categories based on the UK finance report, which are mostly increased, as mentioned, the impersonation of the police and bank, 44% increase. So as a retail bank, we do a lot of education around fraud and making sure that our customer base is suspicious and not really falling under the scams and impersonation attacks. But still we see that people do trust banks calling in, and considering that in many occasions even the dial-in number and caller ID is basically the same what the bank actually uses, it's really hard to differentiate what is the actual fraud and what is the actual bank phone call to you. But again, banks do not ask you personal credential details, logins to internet bank, but still people using those situations and fraudsters can get the information. One scam, of course, can lead to the other. As we bank a lot of fintech companies, some of them in investment space and also virtual asset space, we see that, for example, the impersonation of the bank can actually convert into the investment scams. And and people transferring money to different service providers. And still a lot of people are falling under really persuasive kind of fake brokers, scams who are calling you and provide you a very positive outlook to certain investments. And although investment services are very regulated in a way, people still trust fake brokers who are tiling into you and offering very high growth asset classes. So again, thanks to you, a lot of kind of education and making sure that the client base and especially private individuals should be more suspicious about those callers, but still people are making payments and significant savings from the pension accounts to those scammers. So that all we have seen, and one of the biggest problem is that no one is really talking about this, and no one is sharing information about this, and therefore we thought that today is a very good opportunity for us to really collect some of our good partners and talk about this. And I'll pass over now to Jüri, who's really talking more about the means, what we have seen, which are good for fighting the fraud, and what have been, in our opinion, successful to really protect our clients and the consumers. So, Jüri.
Thanks, Andres. First of all, the numbers you've seen so far, they're mostly UK numbers. I think the situation in Europe at the moment is far more worse. And this is due to the UK banks already dealing with Abp fraud for many years. So they've definitely educated their customers a lot more, and this is only now really catching on among European banks. So it's very logical because real time and instant euro payments are quite recent, but also it's like first snow. It's always unexpected, but we see banks doing a lot better job nowadays, educating customers as well, and it is definitely coming through hard learnings. So, in my opinion, the industry has already fought fraud for a long time, like Anders said, and it mostly used to revolve around cards. Online space fraud or e-commerce fraud was almost always card related. So actually the industry developed a lot of good tools to combat fraud. So if you take away anything from this session, I personally think that the best way forward for Abp fraud is by well, essentially expanding what you already are doing for cards. Many of these aspects are very similar to card fraud. And one of the greatest things the card industry has done is they have collaborated and they have created negative information databases around leaked data, leaked or suspicious individuals, device IDs or machine fingerprints of these suspicious individuals. So there's a lot of extra data you can get, and card fraud is definitely treated as a united front at the moment for payment fraud. The responsibility is sort of moving around because you have the bank where the customer actually banks with, and then you have some sort of intermediary who process the payments for the merchant. And there can be many layers, and if there's no united front to combat the say bad apples, the fraud can hide behind different layers. Whenever we deal with these types of issues, we need to keep in mind that both as banks and fintechs, we need to be very careful with the value that we have from our customers, namely the trust that customers have for these financial institutions. It's very easily tarnished. So definitely it all revolves around the trust of the customers. One of the key issues we see nowadays is money mules. So essentially people who willingly sign up for accounts with financial service providers to allow these accounts to be mismanaged. So the trouble with this is most of the companies out there and identity verification providers and KYC, with exceptions, are concentrating on verifying the identity of the person, because this is something you can actually verify. What is the intent of these individuals is a completely different thing. So this makes it tricky because it's very difficult to gauge the intent of these people. What definitely helps is for fraud fighting, there are a lot of data points involved, and again, the card space has learned to embrace that and gather as much data as possible. There's very complex machine learning patterns or machine learning implementations in place which help to detect suspicious intent, really. And there's negative information databases. There's all sorts of rules. So everything is really there. But typically it is being used to monitor card transactions. So again, I think the mindset is only about to shift now, and is the right way really forward is to extend all of this knowledge and tools to bank transfers as well to get the fraud issue under control. One of the key tools is device ID or fingerprinting that the computers the customers are using. But really the larger message is you need to group together the end customers by any means possible. So to find any chance that different end customers are somehow colluded, somehow linked. There's quite often there's some evidence out there that these end customers are somehow related and they have malicious intent, and the faster you can root out the whole group, the better for everyone, and even better if you can share that information with other financial service providers to make sure they don't run into these issues as well. As Anders said, fraud is a business, and if you get rid of a certain number of money mules from the system, you can help out others by sharing that information as well.
Okay, thanks, Jüri. And I think it's very good moment you really now pass over to Jan, who's talking about Veriff solutions and how it really can help fight the fraud in various aspects, from KYC to also monitoring. So thanks for listening, and now over to you, Jan.
Yeah, one quick remark. If you want to ask any questions, we have the Q&A section available there as well. We'll keep an eye on that, so feel free to pass on your questions. Siri didn't have any questions.
No, Siri didn't have yet any questions, but surely soon we'll have.
So, thanks, Jüri, thanks, Andres. First, let's look at a quick video. It may seem like a commercial break, but I can ensure it's not a quick introduction to the whole topic. I need to reshare this. Okay.
This is Tom. In everyday life, you won't even see him. But we know he's there. Tom is here to do what he does best. He learns about you, even if you're just trying to relax. And he knows exactly how to take notes. Guys like Tom make every day challenging. But not on our watch. With Veriff, Tom doesn't stand a chance.
So, I'm Janne, I'm co-founder and CPO at Veriff. I'm glad to be here together with LHV and blockchain.com, our partner, and explain a little bit about fraudsters like Creepy Tom, how we see them. Veriff is building infrastructure for trust. We allow any website and mobile application to match the person with the government-issued ID. But first of all, there are more than 200 million businesses worldwide, but still only about 5% of the world's economy happens online. The biggest barrier for those businesses to move online is limited trust, which is actually slowing down the digitalization as well. If we're looking at it from the fraud aspect, then data theft and fraud in 2019 report was marked in kind of the top 5 global risks, and businesses worldwide lose $200 billion every year. And the problem has been fixed, so-called charging honest people more, whereas sometimes businesses take fraud as a 5% tax. That is kind of a common thing. Moreover, as was mentioned before as well, COVID-19 has induced overall fraud numbers, as we've seen as well, but more about it a little bit later. So we at Veriff witness fraud attempts every day, and in order to fight against fraud, we decided to put together an annual fraud report, looking back into 2020 as a bonus, as we're looking into 2021 as well. Something that I'm able to show the first time is how does it already look like in January 2021. If we're looking online identity verification market overall, then in 2019, marketplaces, mobility, and fintechs needed online identity verification. If we're looking into 2020 and what the COVID-19 has kind of speeded up is many more sectors need online identity verification. We have examples from the governments, from health, from education, and many other examples where trusted identity is essential for services online. One of the growing phenomena that we've seen is the rise of the deepfakes. What is deepfakes? It's synthetic media where the likeness of someone in a picture or a video has been replaced by somebody else. Why it's important, yet again, said as well before that technology is advancing and fraudsters get smarter and use that technology to do harm as it's a business. Another thing is I can go and download an application today in 2 minutes, which helps me to create the deepfake. So the technology is really close to everyone. It's really, you can approach this really easily. So the cost of fraud is really low with those. If we're going more into the numbers as we've seen it, so we're looking mainly here, 3 biggest sectors that we're working together with today is mobility, fintech, and crypto. And looking into fintech and crypto, it's more specifically. Then in fintech, as we can see it, beginning of the year, we saw a huge increase in fraud rates, which means that 5% of the overall verifications were fraudulent. And in crypto as well, it was already above the average fraud rate as we saw it from the starting of the year. So the average fraud rate is approximately 5%. So in crypto, it was from 6 to 9% the entire 2020. One of the examples how complicated different fraud attempts can become is from a car retail shop that we witnessed. There was abnormally busy traffic that initially we saw the store's employees verifying themselves, but later on, what seemed to be the customers of the same store as well were asked to pose with their government-issued ID and were asked to pose for the portrait photo. What happened in the background is that they didn't get any discount at the shop, as you can presume, but an account was opened without their knowledge. So we managed to kind of communicate this to our client, and we managed to put an end to opening up accounts like this. What are the different fraud types that we see at Veriff? First, there's document fraud, synthetic fraud, where there's tampered ID documents and fake documents. We see identity fraud, identity theft, where there's attempted impersonation or deceit using fake images. We see technical fraud and scamming. Either images, videos are streamed or shown from a slideshow as an example. And even fraudulent access to verification sessions without the person knowing. And then something that hasn't been discussed a lot is the pattern fraud or recurring fraud, as we name it, which is recurring tries to be verified. If you're successful once and you get through the system, you come back to exploit the same thing. And velocity views, you open up multiple accounts while being actually the same person in the background. If we're looking at it on a global scale, where do we see the most fraud coming in? Then overall, those three sectors, US is definitely leading, where 10% of the verifications are fraudulent. UK is fourth, but one of the kind of the examples why this is as such is if we're looking at US and UK specifically, there's a lot of information about the documents, for example, in the World Wide Web, how to make a good fake, for example. So that's why identity verification can't be only about the documents, but it's a much bigger picture, and we need to look at identity as a whole, whereas documents are only one part of it. If we're looking into crypto, then US is leading there as well. In Fintech, it's Romania. If we're going and looking how much fraud and what are the different types of fraud and what's the kind of split between those, it's identity fraud is leading in fintechs. 70% of the fraud is identity fraud, and it has actually increased if we're comparing the first and second half of the year by 7%. If we're looking at the same picture in the cryptos, then the leading is actually pattern fraud. The identity fraud is second, but yet again, 11% increase comparing the first and second half of the year. If we're looking at the year 2020 and now comparing 2021 to this picture, then if we're looking at the fraud rates, which are the lighter green line there, then it's we've seen that the kind of the average fraud rate is between 6 and 8%, but in absolute numbers, as we've seen more and more people being and needing verification, then the absolute numbers are growing quite heavily. Another thing which to point out is pattern fraud and then rise during 2021. If we're comparing the second half of 2020 and we're comparing January 2021, then there has been a 22% increase in pattern fraud that fraudsters are trying to find different ways how to fool the system and trying to exploit them as much as possible. Another real example to show, and then going a little bit with the muling as well, is one of the scenarios that we discovered is that in Vietnam there was actually a business that was buying together for $2 an account, whereas a person could go through the verification flow, hand over the account, and get $2 for it. Yet again, that sometimes the fraud isn't about the document, it even isn't about the person behind it, but it's much wider and understanding the bigger picture behind it. But how do we actually detect fraud? As I brought out the examples as well, identity verification is so much more than just comparing two static images. You need to have a smart decision engine behind that. And this is where Veriff comes in. We have built an intelligent decision engine where we analyze thousands of data points. As humans are subjective by nature, if they need to analyze thousands of data points, we are kind of automation first and only calling human intuition when it's absolutely necessary. And how does the process work is relatively simple. We ask the person to do a photo of their government-issued ID. We ask the person to do a picture of their face. And it seems like this, but actually in the background, there's much more that we collect about this person to understand if Andres is Andres and Jüri is Jüri in the online world as well. One of those examples that I can bring out, there's definitely some things that we'd like to keep as a secret, but in order to fight and continue fighting against fraudsters. But I think the best examples is we're going much more deeper into the device and then network information by cross-linking different verifications together. For example, if we have seen this person before, either being approved or declined, we can cross-link those verifications together. And same from the risk points, from the rating risk labels for different verifications. Are they coming in from the data center? Is the traffic proxied, etc., etc. So different tools to fight against different patterns that we've seen emerge before across our client portfolio. And as I said as well, we're leading with automation first. And then a good example is that we're working together with a huge variety of businesses. If we're comparing banking, crypto, or mobility, then the regulations are already different, the risk profiles are already different, and the geography is already different as well, which means that you can't give one identity verification to every company. It needs to be different, so hence why we tune it based on the fraud patterns and based on the needs as well. So if you're looking at on the right side as well, here's an example of different checks for one customer that we analyze biometrics, document if it's similar to the specimen, different fraud patterns, have we seen this fraudster before, etc., etc. And going back to the same examples of different fraud segmentations is, and how do we protect and then fight against those is starting with the document fraud. We have built an internal database of more than 9,000 different documents where we know how do they look like, where are the security holograms, what are the kind of how do the documents need to look like. And definitely video first solution in terms of understanding is it a real document or not. Identity fraud, we compare faces on the ID against the selfie, for example, and against the gray list of fraudsters as well, understanding if first the ID and the selfie faces actually match. And is this something that we've seen before? But not only looking at the historic verifications as well, do we see a match with any of those? From the technical fraud, passive liveness detection, understanding if this was done in the real time, analyzing device and network information, was this verification accessed before from different place, and risk labels, as I shared as an example as well. And for pattern fraud, this is the place where without cross-linking, it would be really hard to fight against recurring attempts. So we cross-link verifications together based on device, network, face, document, and other information that we collect from them. So to wrap this up, I'd like to remind everyone as well that more businesses are moving online, more people are moving online, as Anders said as well, more people are moving online. So in order to protect the people, protect the businesses, Veriff needs to be a couple of steps ahead of the fraudsters and then kind of advance the technology. So that's it from my side.
Thanks, Jüri. It's very good to see that we have already questions, but I hope everyone is agreeing that we'll give the questions to the later stage after we have heard Amadeo's experience from blockchain, because I think it's quite evident that fraud is only happening because somebody is willing to take advantage of situation, the services, and if at the beginning there is a bank customer, a consumer who's been defrauded to a payment, then LHV as infrastructure provider is kind of intermediator of that payment. Then Veriff is the one who's trying to and making very good work of identifying the fraudsters and allowing legitimate customers to open account. And Amadeo is seeing all the steps before and making sure that only good customers are able to access the platform. So over to you, Amadeo.
Thank you, Andres, and thank you to LHV, our partners, for the invite. It's good to be here with you. I wish I was in kind of the beautiful city of Tallinn today, but I'm calling you from my living room, and I've got an audience of one, my cat, who's also joining us today. Yeah, so as you guys mentioned, blockchain.com is the sort of merchant part of the equation in this group. So we get to experience the fraud ourselves as we try to, serve our customers while also try to defend ourselves against all these bad actors. So today I'll talk about some of the learnings that we've had along the way in fighting fraud in real-time payments. It's sort of very related to what Janner was talking about and what they see in onboarding. Important to say that we are a great partner of Veriff. Yeah, a lot of the data that we see is very similar. So just a little bit about blockchain.com first. For those of you who aren't familiar, we are actually the oldest crypto company still in operation. We host the world's most popular cryptocurrency wallet with over 70 million users. And that's and our products are responsible for about 30%, over 30% of the Bitcoin network's transactions. We also have a number of other products like the exchange, which is a liquidity gateway. We have a B2B arm. Our markets team runs one of the world's largest crypto lending desks. OTC trading and execution services. We run the world's largest cryptocurrency explorer, where you can see blockchain data, the biggest cryptocurrency Bitcoin API. We have an asset management suite as well with one of the industry's sort of best, we think, venture funds. And a bit about me. So I'm a product manager at Blockchain. I lead a number of wallet payments and infrastructure products at the firm. And I've been working in the crypto space since 2013 in a number of technical roles. At Blockchain, we process fiat payments in over 50 countries. We process billions in payments every year. I think there's basically three categories of fiat payments. One is what we call instant transfer, which is relatively new type of bank transfer, where folks can go from money in their bank account to money in our products in seconds. A good example of that is ACH payments in the US or European payments initiations. We also support traditional sort of push bank transfer methods like faster payments in the UK, SEPA in the EU, wire transfers, and even Turkish lira transfers in Turkey. And of course, we also support card payments through Visa and MasterCard. So I actually ripped this off from an internal deck. So when we look at, so just to give you sort of an insight into how we think about payments fraud, our goals are, number one, to scale payments volume. We're in a very risky industry, and we obviously need to meet our business goals while scaling that infrastructure, and keeping our fraud to sales ratio below the thresholds that are enforced by different payment methods. Ultimately, we really want to have a great customer experience while we do that. We want to comply with any risk guidance and regulations in every one of the markets that we operate in. And ultimately, after all of this, we want to make sure that we make some money at the end of the day. So without going too deep there, what I want to spend most of my time today is talking about strategy. So how do we meet those goals? And we see it as a kind of mix of things. There's no single solution that's going to sort of fix fraud for you. But I thought I'd share some interesting insights that from some of the infrastructure that we have internally. I'll actually just go straight into them, and we can circle back in the end. So ultimately, the payments fraud is a multidisciplinary problem. At Blockchain, we break things internally into a squad, a full stack product and engineering squad. And there's really four main stakeholders in that squad. There's the product team, which ensures that the right trade-offs are met and kind of the champion of the customer experience. We've got fraud operations, which really looks at all the qualitative data that's coming in, ensures that we're on track with each payment method, nuance. Our data science team, which looks at all the quantitative data, and works to sort of do analysis and build models to fight fraud. And the engineering team, which builds the machine that keeps everything running. So we actually tackle fraud internally as a kind of full stack group. We try to keep it as small as possible, and a space really where ideas are king, ideas and data. And here's a video of us fighting fraud next to our office. Just kidding. We rely very heavily on local and global machine learning model deployments. We work with a number of partners to do this in the space of payments fraud. And for those of you who aren't familiar, a local model is essentially where we take information from each customer and each payment, hundreds of different data points, and we compare it against other customers and other payments within our systems. And so really the goal there is to predict the likelihood of fraud for a given customer and payments. And so the output of that model is a simple approve, reject, or manual review. An example sort of customer attributes might be their IP addresses, their emails, and their devices. Whereas in the payment, you might have the amount, velocity, and the sender. A global model is similar, but we look at attributes of the customer and the payment against external partners, external partner networks. So if we work with a payment processor that also processes other payments for users for customers both in our industry and outside our industry, that data intelligence is key to being able to tell whether something fishy is going on. And so that's what we call a global model. So has this device, has this card been known to be fraudulent in the wider network of financial services? That information is particularly important. On top of all this sort of machine learning infrastructure, we have a series of rules engines or decision engines. And I think the key here is actually the word easy. So it really should be extremely easy to configure and maintain these. So it doesn't kind of build up to look like a sort of massive ball of spaghetti. And you look at the fraud, the rules engine. The goal should be for it to be, for you to be able to change it without making major code changes or kind of infrastructure deployments, which are risky. it's useful to quickly respond to spike in fraud, and also to run A/B experiments with subsets of traffic. So if you're sort of on the fence about whether a particular rule is going to work, right? You can just very easily just implement it, have it run for an amount of time or an amount of cycles, and then be able to easily sort of match whether the rule's performance was good at either increasing volume or reducing fraud, because that's kind of the trade-offs that you go through. And a rule might be, you know, as nuanced or as simple as you want. Let's say that you want to have a rule that if a user is in X billing country and has more than 5 transactions, send it to manual review. Now, you know, that would probably, you know, lead to a lot of manual reviews. So I don't recommend anyone to implement that rule, but just to sort of give you an idea of what that means. And this is actually what it looks like on the back end. I've kind of blurred out some stuff, but yeah, you know, we enforce sort of these rules, dozens and dozens of them, in a way where, you know, we can easily change them via web interface. So, you know, we enforce things like transaction limits, velocity checks, compliance, sort of we shouldn't be doing payments in X countries type checks, all through this last barrier of defense in case our fraud checks earlier upstream fail. So really recommend that approach as well. Behind all these systems, there's obviously people. At blockchain, we have a 24/7 consumer risk rotation. So these are folks that, you know, get woken up in the middle of the night if there is an anomaly, a major anomaly or threat to our kind of risk exposure. And this is separate from our sort of technical uptime rotations, right? There's folks that ensure that our servers are up and running, and there's folks that ensure that our applications don't have bugs. We have a separate group that works on this. And here the challenge is obviously like there's a lot of data, so you have to ensure to, you know, make it easy to let people know when there's an issue. So we have 2 types of alerts that say like alerts that folks can review, you know, every now and then when they go into the computer and just see what's buzzing. And then we have sort of high urgency alerts that actually call and wake someone up. Things like anomaly detection or sort of worst case scenarios type alerts are all included in there. And so that what that does is it makes it manageable for you to be able to do all of these things at scale with a sort of highly technical small staff. Now, this is actually a little bit counterintuitive because in one hand, we're talking about automation and scale. On the other hand, I'm suggesting that you leverage your people internally that do manual reviews. So every operational department in a firm does reviews of things. They might not notice that they're doing them, but they do. Whenever your customer support team speaks to a customer, whenever your compliance team reviews some sort of escalation or exception or transaction monitoring, or your operations teams processes payments, you know, they do a bunch of decisions to kind of power those through. And there's no real silver bullet, but the one thing to know here is that you must track everything because you don't know, you know, what data will be good by the time that you want to do some form of retrospective analysis. It turns out that some of our best rules and models have come through a lot of these reviews. When you look at them as a trend line, it's just really great what that kind of human intuition can do. And we have goals for, you know, we must look at X percentage of users or payments manually and track those inputs as a way to kind of make sure that our models and rules are kept up to scratch. Other than those 5, there's 3 more sort of goodies that I want to talk about as well. Onboarding is key, as Janner and the LHV team mentioned. Having a bulletproof strategy really makes payments fraud simpler. Just because if you know where your user is and where they live and all that stuff, you know what should be normal for them. And hence you also know if something sort of fishy or suspicious is going on. We partner with Veriff to sort of help us onboard folks. We also have other partners, as we have a kind of fairly complex set of onboarding needs for institutions and electronic checks as well. So yeah, getting your onboarding right. If you can get your onboarding right, you know, everything becomes easier. So that's very important. Partner versus build where possible. This is a very fast growing space, kind of the fraud space. And with the advance of machine learning as a services, it just makes a lot of sense to partner with folks to kind of help you get the latest tools and keep those tools up to date. Because the challenge is, like, you might think, well, you know, we can totally build this thing internally and it will cost us like, you know, three engineering months or 6 engineering months to get that done. But keeping that up to date with the rapidly changing landscape is actually extremely expensive in a space like fraud that changes so frequently. So to really try to estimate the TCO, total cost of ownership, when you're making these partnerships versus building internally decisions. And finally, you know, as a product manager, I get to sort of wear this hat internally a lot. It's super important to be able to measure success or failure the right way and really track the things that matter. So here's a really a glimpse of what actually, if there's any one table that our kind of management team, our stakeholders look at when they want to answer how are payments and payments fraud doing, it's just this one. I've removed a few lines, I've removed a few columns, and I've tried to sort of simplify it. But you know, when it comes to payment fraud, there's really 3 levers that you must apply for every decision that you make internally. Number 1 is, in no particular order, number 1 is sort of volume. How much, you know, how much more flow is this going to bring in or keep out? Number 2 is customer experience. So that success rate, you know, out of all the users that are using this product, how many of them are having a successful experience? That's defined as, like, if they try to make a card payment, do they get through after all the checks and all the things are done, for example. And the third one is fraud. So that fraud actually varies like a lot by payment method. Each payment method has its own rules and nuances. But if you think about these 3 levers, usually, you know, when you want to lower fraud, it usually also lowers volume and it also adversely affects the customer experience. So, you know, there are certain times where sometimes the trade-offs that you're making are, how can we bring in more good volume at the cost of increased fraud? Because we know that while the aggregate amount of fraud that will come in through that decision, it might be launching in a new country, increasing limits. We know even though the aggregate amount of fraud will increase, the percentage of fraud will decrease because volume overall has increased and the amount of good volume is asymmetric or a larger representation than the bad volume or the fraudulent volume. And so that those trade-offs vary by payment methods. Some payment methods have fraud to deposit ratios that are based on the volume of transactions. So like the number of transactions that occur. Some are based on the value of transactions. So, you know, the fiat amount, the percentage of fraudulent fiat versus not fraudulent that comes in. But ultimately, it's these three levers that you need to be looking at whenever you make any decision to stop or improve your payments fraud situation. If you're interested in payments and fraud, we're actually hiring people for this team. So visit blockchain.com careers, yeah, we might have a chat in future. So thank you very much for your time. You can check out our products at our website.
Thanks, Amadeo. Very good overview, and it's always good to see really the kind of service provider view to the fraud and measures. So I think there's a lot of good topics which everyone can take and implement. We have quite a number of very interesting questions. So I guess some of them will be very specific to Amadeo, some to Janer, but we tried to answer some of them, all three of us or four of us. So, but the most voted question goes, Amadeo, to you. And this is regarding the fraud team responsibility. And the question goes, where does the responsibility fall between the product and the fraud? And the second question as well, where is the threshold of fraud rate being too excessive?
I think you already answered the last one, almost last slide with the rates. But yeah, go on.
But the responsibility, product and fraud, where does it lie in blockchain.com?
Yeah, so we actually see everything as a product. So even internal systems like fraud defense are a product, and they're usually led by a product manager. The kind of traditional sort of compliance professional that only looks at the kind of fraudulent data without context on the rest of the product and the business really becomes a little bit ineffective when what you're actually trying to do is grow volume, and as a result, by doing that, you get to reduce fraud as a kind of percentage level. So yeah, at blockchain, you know, usually these initiatives are led by a squad of folks from these different groups, and the role of the product manager there is to be the voice of the user, whether that user is an internal agent that looks at applications or looks at payments and manual review, or whether it's an external user like a cryptocurrency buyer.
The question to Janer as well, where do you see the responsibility lies? If you talk with the clients and mostly, then how do you see this being really distributed, the responsibility?
I was just about to comment as well that we actually have a really similar setup as explained by blockchain as well, that we have actually fraud operations who's looking through what are different patterns. We have product, we have engineering, and therefore as well, kind of it's the virtual team working together with the same goal to get fraud to zero, which is a kind of division. And at the same time, not hurting the good people who are doing that. But still, the product owner, product manager is responsible of leading the whole virtual team towards the right goal and taking the right initiatives. And I think I'm going to comment the threshold part as well, because the same thing applies to us. If we track too many things and block the fraud too much, honest people are going to get hit as well. If not enough, then we're going to get fraudster through. I think this is different from sector to sector, as already the different themes that they see are different. So I think it's a really wide question. So it really depends from the sector. And another thing is sometimes, and that's the part that I agree with Amadeo as well, IDB is there's a lot of work that still needs to be done. So it's really hard for businesses to build this out. Why? This is the same example that previously, for example, for liveness, a lot of companies used, hey, do acrobatics, say some numbers out loud. But we, for example, built this into the video recording, understanding this. So you can step by step actually make it less hurt, so that you can do those things in the background. But it's the innovation that we're going through and innovating, and it needs a lot of focus.
Do you want to comment from?
Yeah, I could comment on the thresholds. It was interesting to see actual numbers in the presentation from Amadeo, because our thinking is quite similar. You know, the industry, especially the card industry, has developed some sort of threshold rates, and these are written down, and there's no official thresholds for banking payments really, and it's a bit of a problem because obviously the risk department would like to see zero, but then if it's zero, there's no business. So I think sort of going by what the card schemes have figured out over the years is a good thing. But also the average card transaction is what, 200 euro or something versus banking payments. So there needs to be some calibration, and obviously, like I said, the industries are so different that these need to be taken into account as well.
The second question, fraud-related data interchange between institutions. It's email-based at best, I can tell you. Sometimes it's still some more traditional ways how it is interchanged. But is there anything at the horizon what would change this? I can answer this. Maybe this question is posed by Taavi, but Taavi from Salvi is actually building a tool. Salvi is one a very nice and quickly growing startup building fraud and AML fighting solutions and tools. They have thought of building interchange solution for financial institutions, and I think it's a key that kind of standardized information about fraudulent transactions, fraudulent activities should be more changed between parties, and I think it's very good to have that initiative. So, yeah, Jana, do you want to comment?
Actually, I have a question for Jana. So, if someone is registering to become a customer of blockchain, and this person is also a customer of another client of yours, you make the other company aware if you flag someone as fraudulent. So do you have a negative information database within your own customers as well at the moment? And also, do you have any connections to, say, external databases somewhere else?
Well, there's definitely regulations that we can share, for example, blockchain.com, people that we have verified for blockchain with any other of our customers. But at the same time, as we have lots of customers, including from the crypto as well, we can see the patterns emerging, and we can definitely see across all of our clients. So that's something that we can take into consideration based on kind of data analysis and how to fight against those things. But we can't specifically share that this client was actually a fraudster in another one. But we can play around with that. For example, we have a gray list, and we can hint and send risk labels, etc., etc.
Maybe extended question to Amadeo, that would you share the data with other financial institutions about the fraudulent activities, fraudulent accounts, something else? So how do you see this, the data sharing part?
Yeah, that's a great question, Jüri. Honestly, I'd say that it's fairly antiquated, the systems that are in place. We as Andres mentioned, they're mostly email based, and they mostly center around the payment provider brokering these communications. So you might have, a large bank like LHV getting a report that one of your other customer transactions that were going into blockchain system was fraudulent, and so we see some of these things via kind of email reports, and that makes it very difficult to even like parse the information. So one of the things we had to build internally was a tool that looks at all these emails and compares it against our internal systems payments and actually tags things. So we know in aggregate what's going on as opposed to in specific cases. Other than that, some vendors are a little bit more sophisticated. So as Jüri mentioned, they use intelligence from specific sort of within industries to craft models, and they have some of them have interfaces to provide decisions or reports. Now, obviously, we are incentivized to submit that information because they can make some of their decisions in a better way, and so that improves our sort of performance. But at the same time, it also helps the industry as well. So I see this sort of developing in a hubs model where you have like different big hubs of either identity providers or payment method providers or fraud sort of providers, all with their ever-growing databases, and that intelligence just making it through when folks through kind of large merchants when kind of decisions are applied across different vendors. It's an interesting problem. It's a hard one to solve because the incentives are not fully there for everyone to have a lot of transparency, and also there's obviously regulation. There's certain data that you can't share. So
I guess this is specifically for Jüri. Basically, the question is how bulletproof are the current KYC tools and using lookalikes and deepfake, and what do you think?
Well, they are bulletproof. Like, we are bulletproof. We're definitely aiming towards being allowing 0% of fraud through, but we're not there. It's a vision that we're heading, but I believe that's a little bit idealistic as well to get to 100% protection. Definitely, we'll get closer and closer to that. Already today, 0.2 false approve rate, and those are the kind of metrics that we're working on as well. But there's still a lot to go. As I explained earlier as well, there's like loads of initiatives that we're working on already with globally how to get this percentage down without influencing the conversion rates that we allow people to go through. So it's a trade-off. We need to make the trade-off with our clients. So our goal is to get the trade-off more like a silver bullet.
Another question about crypto fraud, and from the angle that how different are traditional fiat fraud and the new crypto fraud. Jüri, I think you are the old fiat fraud expert here, so.
Yeah, anti-fraud. Yeah, I think it is fairly similar. The only dimension it adds is where fiat fraud is more regional, because it's typically connected to a certain currency and the currency of that region. But crypto adds the dimension of international instant payments, and it adds scale, and that's it basically. I don't think there's much that it adds, but it's quite a lot already. So the dimension of international traffic.
Maybe one thing I would add, and Amadeo can comment, and Jüri, of course, as well, that I think today the boundaries between fiat fraud and crypto fraud are actually sometimes very complicated to draw, because quite often the phishing or impersonation can turn from fiat actually directly to the crypto, because the funds are flowing to the wallets, and then, like Jüri said, to the as international wires to anywhere else. So Amadeo, maybe you add something as well, that how different you see those two things, crypto and fiat fraud.
So I'm very much with Jüri on his remarks. We think it's very similar. The challenge with crypto is that we get just things are taken to the extremes. So instead of as Jan mentioned, sort of lower average levels of fraud in certain occasions, you see just increased attacks of certain certain types of attacks. Sometimes we get and maybe just kind of stepping back from payments fraud into just more general fraud, we get a telecom in a third world country being hacked, and then we see tens of thousands or hundreds of thousands of accounts attempted to be compromised from those networks. And that challenge is there because of crypto, but I'd say with payments, because everything flows to fiat, it's very similar. Actually, when it comes to crypto payments fraud, I'd actually argue, if you remove the fiat from the equation, it's actually a little easier, because of the fact that crypto transactions are usually irreversible, right? So if we take crypto as a payment method, it won't get recalled ever. Well, it could get recalled, but let's just say that it's extremely difficult. And also all the activity is public. And this is why we are big believers in the ability for crypto to improve the existing financial services infrastructure. And yeah, it's usually the link between fiat and crypto that creates difficulties as opposed to just crypto.
Because Amadeo, next is definitely for you, as you mentioned this, that the question goes that so basically, is it a way to reduce fraud is to increase the volume? Is that the approach you have, or
it's a bit of a loaded question?
Yeah, it is. Yeah. So I guess
well, it's every I think that it's the spirit of what I said is that, but the reality is every dollar that you get in fraud has a cost. Every payment method that you get fraudulent has limits, both as a percentage of the transactions limits, but also an aggregate amount of fraud. And so it's not usually just the case that if you get more volume, you get less fraud as a percentage. You should most of the time you have to make very difficult trade-offs between bringing in more volume, mostly from good users, and limiting fraud. So I'd say it's generally directionally that case, but it's the devil is in the detail.
Yeah, I have to say as well that I think, as Jüri also mentioned, that there aren't any thresholds which is excessive fraud or not, but over the years in a card industry, it clearly has defined a certain place. It will come in bank payments, retail payments as well. I'm 100% sure, and I think every single fraud is excessive. But practically speaking, as long as we have technology like we have, as long as we have criminals like we have, there will be always fraud. If we eliminate the fraud, unfortunately, the byproduct is zero business, because the usability will go very adverse. The limits will be very low, and it will practically be impossible. So it is almost in a way like we would like to try to minimize or absolutely remove all of other criminal activities. So it's something, the fraud, we need to fight everyone in the industry, but it will never be zero. That's unfortunate true. Right. So there was one question which I wanted to ask from Jana, and it's very interesting one. So what about the account holder? Doesn't use his full name every account. Could the system perhaps allow such person to open additional accounts by simply adding his middle names? I think the name issue is also quite general. Some cultures, some countries have a number of middle names. I think Portugal and Brazil are the ones where you have the very common situation where you have multiple middle names. Some countries don't. And what about your best practices? Because you are the ones who are capturing the actual name from the document. And a lot of people already use a shortened name in their wallet creations, bank account creations, but what's the practice you have?
So we reached to the point of complexity in online identity verification that there are 190 plus different countries, and to our knowledge, there are at least 13K different document specimens. And there's a variety of how those specimens are built together, where the name is, where the first name is, last name is. So that's the complexity of what we have kind of built. But the answer is quite simple, that we rely on something that we can trust. We rely on the document to understand what's the name of that person. And that's our kind of one source of truth.
I guess an add-on is many countries don't have identity codes or one universal identification number or code. Even the UK does not have one. So I guess we're quite privileged here, and in Japan, where they have identity codes. I'm sure there are other countries as well. But what is the main sort of key unique identifier you guys use? Is it the document number, or is it?
That's a really good question, because even in Estonia as well, the kind of the identity number is kind of one piece of the puzzle. You need to know something like a PIN or something to use that identity. So, and in US, we have social security numbers, for example, which could be a similar thing. But what happened after Equifax, you can't trust kind of the social security number as an identifier. Those examples show that identity isn't just one number. Identity is a bunch of different data points, which you can kind of combine together and understand if this is the person or not, because different countries use different examples. There's no general standard for that. And this is why you need to fuzzy match the identity together based on multiple data packages.
Amadeo, how do you approach to kind of names which have multiple middle names
or identities?
Identities, and how easy is to create multiple accounts by same person, just adding a middle name?
It all comes down to fuzzy string matching, as Jana mentioned. So there are these algorithms that you pass them a few names, and they tell you, the likelihood between these names. If you get my name, Amadeo Pelice versus Amadeo A. Pelice, which is my middle name initial, those will come up as being over 85 or 90% likely, the same. And so, internally we have a number of systems that have threshold checks that if a name is not as likely, it'll go to manual review. And once a human is there, they actually don't do much better than these algorithms. But what they can do is look at other information, like the document that was already processed through the onboarding process, or some of the other pieces of contextual information, and then they can boost the performance of that check. If they're not sure, we just ask the user to submit evidence, either a bank statement or something like that. But we really try to avoid that because it's both very expensive, and it's just those documents can also be forged, and it's also a very poor customer experience. So yeah, that's kind of a long-winded answer to say that it's a very difficult problem.
Good. So we have some questions left. I tried to combine a couple of ones into one. So there is actually a question about what is the kind of effective tool or approach to tackle fraud, and whether this is a machine learning or rule-based approaches, and whether you actually would use something like network checks like IP addresses and so on. I think this is a probably best question to Amadeo and of course Jana as well, that if you look at the complexity of the fraud, if you look at the data that's available, what is the best tool? Or maybe it's a combination of different approaches, different tools, and combining AI with very hard rules-based statistics, plus also combining all network and device information. So what do you think is the most efficient way, in your opinion?
So we use all of them as separate systems feeding into that central rules engine, which can also have sort of human judgment-based rules. So we might have a model that is trained to catch local sort of fraud, right? And so that gives us a score. We might have a global model. We might have vendors and partners that tell us certain things. That all feeds into this central interface that our agents can change relatively easily. Not everything is as easy as just making a couple clicks, but we're trying to make it that. We're trying to get there for everything. And ultimately what comes out of all of those is a simple yes, no, or manual review result. So I completely agree, like machine learning alone is not the answer because they're usually trained on historical data or like very narrow problems. But it's usually the combination of multiple of these inputs that gives you the best results.
Yeah, I would add as well that, like Amadeo said, if we're looking at, for example, our data as well, different examples that fraudsters have used, there's a really long tail, and people are really kind of can think of new things. And if you want to only use machine learning, you need to have data to train the models. And then by the time that you have data to train the models, it's already no use because the fraudster jumps into a new place. So it's a mixture of things of training models, of being really agile with the approach, using operations team, and then fast rule setting, as Amadeo said as well. It's a combination of things depending of what is the exact vector that you're seeing that is coming in.
And I guess the last one, which
shall we wrap up with some predictions for the future, which are the most annoying ones to predict? So because I thought of it, I can go first. I had more options.
That was one of the questions which I wanted to ask for last. What the predictions for 21? So.
Yeah. So from my perspective, definitely the European payment fraud is going to skyrocket this year. That's for sure. It's being fueled by instant payments. At the moment, it's also slightly being fueled by the crypto boom, but there will be other booms, and it will definitely skyrocket. There will be some sort of knee-jerk reaction from either the scheme or regulators, probably regulators first, because they are there to protect customers or consumers who are essentially the victims. Yeah, I'll leave it at that.
I agree with everything that you said. My hope is just that with how the regulators react to it is that online identity verification is combined together a little bit as well across Europe, with working together with governments a little bit more in terms of fighting against the same enemy together. That's something that we're trying out already at the moment as well, and we're seeing the same trend happening in terms of that, how based on the feedback that is going to happen, we can come closer and fight the real enemy.
Leo.
Just to add to what you guys said, I'm really excited about the rise of push payment mechanisms being really easy to use. We think that that's going to reduce fraud. The challenge with pull mechanisms like cards or direct debits is that it's very easy to have fraud on them. So things like open banking, payments initiation are very exciting to us. Yeah, as those things rise, I think fraud will reduce after the initial hurdles are cleared.
Excellent. Thank you for a very good session and very thoughtful discussion. And I really hope that the audience got some good ideas what to do and where to look this year and beyond that. And yeah.
Thank you. Thanks. Thanks, everyone.
Thank you.
Thanks, guys.